Mr. Spearman, I'll begin with you if I can. You mentioned that H.R. 1537, the Credit Union Regulatory Improvement Act, which I support and co-sponsored, would raise the business lending cap. Could you explain a bit more why this is important and what would lifting this cap increase credit card lending, do you believe, to small businesses?
Yes, it would. It would increase credit card lending and would also create additional lending to small businesses as well. The cap is a statutory cap that was created in 1998, and at this point our credit union is dangerously close to that particular cap. And since there is not necessarily a secondary market, much as there is in the mortgage business where you can sell the mortgages and retain the servicing, there is no such established process here in our credit union industry at this point. So it will create a pullback, if you will, of financial institutions that are at that level not to be able to offer additional credit. And at this point, like I said, our institution is facing that particular hurdle at this point in time. I know many other organizations are as well. So it is a limiting factor, and it would also cause issues on credit cards, particularly those that are larger credit cards, say credit cards in advance of a $50,000 to $100,000 level. The way the policy works is as long as the credit limit is at that level, we have to account for that for the cap. Whether the balance is used or not, it's the limit that's counted. And that obviously could cause a problem and has caused some problems there. So we are anxious for relief. We continue to work on that, but it is an issue that we're facing, and I know many of my colleagues are facing that as well.
Okay, thank you. Mr. Rusker, what standards do most banks use to evaluate the credit worthiness of prospective small business customers?
Well, I think it depends obviously significantly on the type of business you're going into and where they're going to be doing their business. But I think traditionally community banks use the same criteria. You're looking at the capacity of the borrower, the creditworthiness of the borrower, their business plan, and when their break-even point is going to be, and what does their business plan look like and who they're going to do business with. Are they going to do business with a certain segment of the economy that is very susceptible to big swings in the economy or big swings in the business? So there's no cut and dried criteria, but there is an overall review of the entire business plan, and strategic plan of the small business owner is very important. And I think that banks, as a rule, try to find ways to say yes. That community banker lives and breathes that small entrepreneur in his community. And as I keep saying, it's that relationship that goes there. And I think a good example of that is a young lady that graduated from the University of Minnesota with a degree in architectural design and focus primarily in landscape design. She had excellent credentials, but no idea on how to develop a business plan, how to do things. She worked with a community banker in Minnesota. They developed a business plan. They got her incorporated. They did all of the work for her and with her and set up a line of credit with her. So it's a total relationship.
Thank you very much. Mr. Gatewood, I'll move to you next if I can. Your written testimony said that credit cards give you and have given you the flexibility and fund availability you need to operate, particularly compared to traditional lines of credit. Would you elaborate on that just a little bit?
Yes, sir. Our credit cards give us a term to pay or a length of time to pay from the time we borrow the money. In my business, which is federal government contracting, I have to turn around my money pretty quickly. It's sometimes tough getting paid from the government. The banks don't give us any flexibility. They have certain days you have to pay, and if you don't, you start incurring interest rates and sometimes fines and so forth and so on, and of course you risk default. I appreciate Mr. Rusak talking about community banks, but we don't deal with community banks here in Washington, D.C. We deal with some of the nation's largest banks, and they're not warm and friendly. Not at all. So they have a huge risk aversion, and over the lifetime of my 19 years in business, we've really had a hard time dealing with banks. But the banks have a set date that money has to be paid, and there's no flexibility whatsoever. So we stay away from them. We have gone, if I might say, in the federal government contracting community, and this is no kidding. As a matter of fact, some of you may have seen my emails to the Senate and the House, 444 days without getting paid by the federal government. 6 months, oftentimes. I'm not saying that American Express tolerates any tardiness, or the other credit cards we hold, our Visa and MasterCard, tolerate any tardiness, but they have customer service reps that work with us that understand our business, and they know they're going to be paid. And that's a huge flexibility for small businesses supporting the federal government community.
Thank you very much. Dr. Walker, you've researched business startups all over the world. Is it common in other countries to use credit cards to begin a business and perhaps to expand business as well?
From what I know, this is really just beginning. That lots of the rest of the world are observing the fact that so many successful small businesses in the United States have begun this way, and people looking at it and thinking, gee, this may be a source of credit they never imagined. Also, banks in many other countries really are just beginning to make loans to small business and used to depend on what we call informal investment, meaning other investors, friends of the entrepreneur as well as the entrepreneur's family.
Thank you very much. And finally, Dr. Lam, has the recent economic uncertainty and tightening of credit in the financial markets resulted in small businesses using credit cards more frequently, and do you anticipate that that would be true in the near term?
I would not have access to usage rates as of the last several months. Most of the data that I've utilized has been from earlier reports, census reports, SBA reports, NFIB reports, and so forth. However, I'm convinced that the credit card industry itself can tell you where you had dinner last night. They know exactly where you are, what you're spending, what you're doing, and I don't believe that there are any illusions about their ability to do data mining, and they could certainly address your question very specifically if asked.
Okay, thank you. Now, let me follow up with one more question then. You once wrote that there's not a lot of academic research on the use of credit cards by entrepreneurs, despite the fact that there is widespread use of financing with them. Is this still the case, to your knowledge?
I believe so. I can explain why if you are interested.
Sure.
I don't believe that it's very sexy to study the landscaper who has 5 persons on a work crew as compared to some Silicon Valley startup. Obviously, when university researchers who are independent thinkers, of course, conduct their research, they may be influenced by other factors, such as the fact that larger businesses that are established have better data sets. Landscaper might keep very minimal records, and nevertheless, the problem is that these zero-employee businesses are extraordinary in their numbers. It's the vast majority of all businesses. But I don't think that they have been given proper attention as yet. I believe this is changing